My portfolio has been quite flat for this month and I've taken advantage of the dip. In this video, I'll run through my whole portfolio for the month of November. I'll show you my buys and sells for the month, the dividends I have received, and the future plans for my portfolio, as well as some of the lessons I've learned along the way being a student investor. This is the Investor Apprentice channel where I research high potential or undervalued stocks to find out if they're a stable long-term investment. If you don't want to miss on any future videos, drop us a follow. And with all that being said, let's get into the video. So we can now head over to my 2022 account to see how my portfolio has performed over this last month of November. So my starting portfolio value is about £13,200. I am down just under £600 or a minus 4.3% rate of return. I've tried to take advantage of these dips and I've put in about £1,000 this last month. Of course the growth isn't there this month, especially after this year where I'm up about £2,200. But overall it's not about short-term gain, it's about staying consistent and putting money in because I'm here for the long run. I want to see these companies, these high quality companies grow over the long run. My S&P 500 is quite flat for this month, not much of a move, but over time you can still see £250 or 11% return. A company that has done well this month compared to everything else is Google. It reached all-time highs not long ago, about $330 a share. I was up nearly 90% on this position, and after everybody was doubting Google, saying it's the next eBay, saying that AI is gonna kill its search revenue, it has shown how strong of a company Google is. I wish I did buy more at maybe about 270, but I didn't, and now I think at these prices it is maybe a little expensive. If it does drop to around 290, I'll have a look, I might increase my position. Next up is Nvidia. It hasn't made much of a move, what it is down 10%, and a lot of this is because of the recent talk with Google's TPUs, but it's a company which I see propelling the new age of AI. I was up about 50% on my position at the best case, but I'm still up a decent amount, and it's a company where I might look to add more because it is a very strong company, Nvidia. Next is Robinhood. I was up about 250% on this position, where it was at all-time highs about 150, but even now it is still the most performed S&P 500 company of this year. If it does reach maybe 100 again, I might look to add a bit more, but at these prices, I don't want to add, as it does seem quite expensive, but it's still a very good, strong company, a company that I can still see hitting $500 per share in the next couple of years. Next up is Amazon. I bought a decent amount in this little dip because it's a company that I can see being the first $10 trillion market cap. It's what everybody says, and this is because it is so well diversified across so many different sectors. I think Amazon is going to be the next big robotics play, and it's definitely something to look out for. But we all do know Amazon, which is why I think it is a very safe investment. Next is Grab, down 11%. Hopefully this will have a strong year next year. It's a very big play in the Southeast Asian market. A company I would describe as a growth stock. I'm happy just letting it sit around these prices. Hopefully we'll reach maybe $7, $8 next year, and from there push on and hit new all-time highs. Next is Rolls-Royce, down 10%, not much of a move. I think at these prices it's still quite expensive. I don't really want to buy in. I've held for some time, but still decent growth. Novo Nordisk, I have taken advantage of these recent dips. I'm now at 14 shares where I only started at 2. It is about £500 this position, and it is still quite undervalued, I think, and something I would look to put more money into. Next is Visa, again quite flat, not made much of a move this year. I'm down 3%, but I don't really mind. It's a company where you can see strong, consistent growth. As everything else likes to go up and down, very volatile, this is something where I can see good growth and has a small dividend yield, so I don't mind collecting that dividend. A company that has done very well for this year and this last couple of months is ASML. Having such a strong moat, being a lithography machine maker, nobody else can really challenge them, and I am up 50% on this position. I wish that I did buy more after the dips, especially after that earnings 2 quarters ago, but I'm still happy to hold, and if it does dip down I will 100% look to buy more. So a new position that I recently bought into was Meta, and this is because they've taken quite a big dip, down from just under $800. I'm quite flat right now, but it's something I wish I did buy more in, especially at these prices. I think it's very undervalued. In the next couple of months, maybe next year, I can see this hitting new all-time highs again, and I might look to sell out, but it's still a good conviction buy. Next is Greg's. I have finally just recently broken even, but a company where I'm hoping that it will have a good strong end of the year, especially coming into cold Christmas months, hoping that people like to buy more of their pastries in the next couple of months. A good strong company with a decent dividend yield as well. Hopefully they have a good year next year, as they are down quite a bit this year. In this last month, I also taken advantage of this Nebius dip. It has reached quite high prices this year, and taking a dip to my average, I have been able to increase my position, taking my new position to about £400. Hopefully this company can really deliver on the standards like the $10 billion contract with Microsoft, and hopefully they'll be able to get much more big deals like this. Next is Nike. Not much of a move this month. It is down a fair bit in this last couple of months, and hopefully they'll perform good running up to the World Cup next year, and maybe reach all-time highs again, or at least push that $70 to $80 range. B&M does seem a bit like a falling knife. It keeps dropping, but is again a company I'm looking to hold for the long term. A company where I can see good growth over the long term, and it does pay a decent dividend. A company that I'm looking to buy into in the next couple of months is Vici Properties. They've taken a decent dip, and I want to take advantage of this. They're down 8% now in my position, so I'm looking to DCA in and maybe push around 20 shares in the next couple of months. Next up is Oscar Health. After all this talk around the ACA subsidies, they've taken a big dip and they've managed to come back up, and I'm about even. I can see this again as a very good strong growth stock going into next year. Greencore hasn't made much of a move. I might look to sell out if it does reach about that 120 pence per share, as I want to put my money more into growth stocks, but it has got a decent dividend yield. BMNR has taken quite a big dip because of the Ethereum dump. We'll see if we get a Santa rally by the end of this year, but I don't think so. Again, I'm in this for the long term, and I can still see Ethereum running back up. HIM's another long-term growth play. I want to increase my position in this in the next couple of months. Then the next big bit AI, not much of a move in this last couple of months. It is quite up and down. I might sell out of this if it does reach that $8-9 mark again. Realty income, not much of a move, quite flat, same with League in general, and the rest are just looking at the heat map for today. It is quite mixed, not much big moves, but again, I'm in this for the long term. I don't expect to see all my companies jumping up 10% on the day. Having a look at my total investment value for this month, I'm just under £13,200. We're about 2 grand in profit and 18% rate of return. My best case was about 27% not long ago, but if I'm able to beat the historic returns in the market every single year, then it's better than putting my money in the S&P 500. As long as I'm able to invest in high quality companies, I think I will see good growth, and from this I will be able to keep growing and beating the market. Not a bad month. I know things have gone down, but I've been able to take advantage of some of the dips that I wanted to. And again, I'm in this for the long run, so I don't mind seeing these dips. I want some of these dips on these high quality companies because the companies I really trust and I can see very good growth in the next 5, 10, 20 years. So now we can have a quick look into the buys and sells I have made in the month of November. So the first stock that I bought into was my Vanguard S&P 500 ETF VUSA. I bought 0.83 shares, which cost me about £80. I do typically buy in £200 every single time I get paid, but this month was a bit different as money was a bit tight. My new position size is about £2,300 with a total of 23.74 shares and an average cost of £88. The next stock was Amazon, stock ticker AMZN. I only bought 0.2 shares, which is about £35, taking my new position size to £788, which is 4.5 shares, and an average cost of about £170 or $221. The next company was Nike, stock ticker NKE. I bought 0.5 shares, which cost me £23. This takes my new position to £387, which is 8 shares or an average of about $62 or £47. Next up was Novo Nordisk, stock ticker NVO. Bought 4 shares, costing me £140. My new position size is about £520, nearly 14 shares. So next up was Meta. This is a new position for me, and I bought 1 share which cost me about £484. This is a company which I can see quite undervalued right now, and I see good growth long term. The next company was Visa, stock ticker V. I bought 0.5 shares which cost me about £130. This takes my new position size to just over £500 with a total of 2 shares. Next was Nebius. I bought 0.85 shares which cost me £60. This takes my new position size to £373 or a total of 5.35 shares with a decent average of about $80 or £60. Next was BMNR. I bought 1.5 shares which cost me about £42.30. This takes my new position to £176, which has taken a big dip, which is about 7.5 shares. Next was Vici Properties. I only bought 1 share which cost me £22. My new position size is about £260 now with 12 shares with a decent average, but I'm looking dollar cost average down as the company has dipped quite a lot. Next was Oscar Health, stock ticker OSCR. I bought 7.5 shares costing me about just under £90, taking my new position size to £238, which is 18 shares with a decent average as well. And finally, my last 2 stocks, the first being Greg's, stock ticker GRG. I bought 6 shares costing me about £92. This takes my new position size to £435 or 27 shares, and I've just finally broke even. And finally, B&M, stock ticker BME. I bought 30 shares costing me just under £50, taking my new position size to £280, which is 170 shares. So having a look at my overall total buys and sells for November. So my overall total spent was £1,242 and I sold about £36 in stock. I received £7 dividends. So my total expenditure in November was just under £1,200 and I really tried to take advantage of this recent dip in November. So fingers crossed for some good growth going into 2026 and a strong year next year. So we can now head over to my Excel spreadsheet which tracks all the dividends I have received for this month and for this year. So this month of November I received £7 and 4 pence in dividends, getting paid from ASML, from UK Wind and from Realty Income. UK Wind really saved this month, paying me just under £6 and overall it's not been a bad month of dividends. So the total I received for this year is £61 and 34 pence. Hopefully this time next year I might be pushing that £150-200 mark, and over time as I keep investing into these dividend paying companies, these numbers will compound and grow over time. So next year it might not be £5.96, it might be £50 if I can stay consistent with it over time. And finally, we can have a look at my whole portfolio dashboard to see all the investments I have made. So my stock value is about £13,000. I have about £600 in crypto, down quite a bit because of the recent Bitcoin drop. I have about £900 in gold, decent growth there, taking my whole portfolio to about £14,000. Decent growth. I have 25 holdings, one of them being my Bitcoin. I have £61 all time for my dividends. I have a just under 2% dividend yield with a yield on cost as well. These are all my holdings. This is my breakup of my crypto, gold and stocks. Then these are the growth. You can see hoarded right up there. ASML not bad. Google, Nvidia, some of them are down as well. My portfolio value over time, as you can see, is constantly increasing because I'm not taking money out. I'm just letting things grow and compound over time. And then here you can see the market value and total cost over time. But overall, not a bad month for my investing journey. I'm nearly reaching that full year milestone. And from this first year, I've learned a lot. Hopefully, I will take this and grow even bigger and better next year. So thank you for watching the video. Remember to like, subscribe and leave a comment below as it really helps out the channel. I'm documenting my whole investing journey as a student apprentice here on YouTube, and if you want more videos like this, just let me know. Thank you for watching.